So we've had some pretty crazy things happen over the last 24 hours, and if you were trading on Thursday, you probably saw that right before after hours and also in after hours as well, we saw a lot of stocks really reacting to this news, and that news involves war, oil, and the stock market, which will ultimately be affected by this. So this is Bull on Parade,
And this is Bagrider 7.
and you are watching Market Dial.
Amid rising tensions in the war over Ukraine, Putin announced that if NATO keeps sending military aid to Ukraine, there will be unexpected and unpredictable consequences for us, as well as President Zelensky himself saying that the world should be prepared for a nuclear strike. So, as you're all probably aware by now, the Russian warship, which was the flagship of the entire Black Sea fleet of Putin's, has now been sunk by Ukrainian Neptune missiles. The symbolism of the Moskva being sunk is very, very important to pay attention to, because it shows Ukraine can strike even off of their coast. However, Putin has now seemed to give the orders to take revenge on the civilians of Mariupol and other different cities and towns within the region they control or almost control.
All of these very sudden and dramatic news events over in Ukraine has caused a lot of inflow into the oil and gas sector. Now, after Putin's ex-economic advisor explained why he believed that an embargo on Russian oil could possibly end the war in as quickly as a month, the European Union very, very quickly in response to this drafted an oil embargo. So the word embargo is starting to really become a very favorite word of mine for obvious reasons. Shortly after this announcement, my favorite thing to pay attention to when noticing a rally like this being underway is to pay attention to the benchmark Brent crude oil, and you can find this on oil price. It was up about 2.68% at the time of this video. So Chinese demand destruction is apparently going to counter the demand in the oil industry currently. I personally do not believe this, and the reason why is because they run a 7.886 million barrel daily deficit, and they only export about 58,000 barrels. Likewise, it is no surprise that OPEC would be telling the EU that it's not possible to replace potential Russian oil supply. And the reason why I say that is because the OPEC has been notoriously using oil as a bargaining chip to kind of lessen tensions in their region. Because after all, a lot of the countries involved with OPEC essentially are only worth their oil in the eyes of the Western markets. And Germany is particularly reliant on Russian energy sources, as around half of their energy use, as a matter of fact, comes from Russia. So with every big problem, there needs big fixing, and possibly a solution to these problems could be the fact that the Biden administration very, very unexpectedly announced a resumption of oil leases on federal land, which includes on and offshore drilling. So first up, we got INDO, and this company right here ran very, very intensely from a price of 261 to a very, very high price of 86.99 at the first prospects of war and supply shock slash demand on petroleum oil across the world. So this move obviously indicates a high level of reactivity and hype behind this stock in particular. My thought as to why that may be the case is the fact that this company is very, very close in proximity to Europe, whereas all these other US-based companies are quite far away. This company right here operates in Indonesia and some other regions that it has the rights to operate in as well. So the close proximity to Europe may mean that it can get barrels of oil there very quickly if need be, and likewise ran on Thursday just before after hours, up about 60+% before consolidating on what appears to be a horizontal channel for the end of day. Now we've got NINE, and this company right here is a completions service provider, so it kind of is the finisher whenever you're thinking about oil companies operating. This is very integral for the whole entire industry because all oil and gas operators whether it be frackers or whether it be petroleum drillers, need companies like this in order to operate. What I like about this company right here is that it is not too high, and by that I mean that it is consolidated pretty well and didn't overextend this last Thursday, whereas many of these other stocks seemingly may have. And there obviously is a lot of major retail interest for this stock as well. Next, we've got IMPP, which likewise is very integral to the whole entire industry as it is a sea transporter company. This also has a lot of hype. Likewise, short squeeze characteristics due to the high reactivity in news like this. Like a lot of these other companies we're talking about in this video, I would not be surprised if this one gapped up pre-market. This one particularly, I would not be surprised if it hit the 160 plus mark during the pre-market session, as a lot of the news that broke happened actually when the market was closed. So this shortened week and this long weekend definitely do indicate to me that there will be a lot of FOMO behind most of these companies here, especially the advent and likelihood of new news coming out, which may further the situation and increase our bullish case here. Now we have HUSA, and this company too is very similar in my opinion to IMPP. This is a small niche company that operates in a very, very small region of Texas and Louisiana. This is a Gulf producer. So what that means is that they produce and drill their oil around the Gulf states, particularly these two states, Texas and Louisiana. This likewise is an independent gas and oil exploration company, and by that I mean that this company goes and finds nice little areas to secure rights in to kind of get their job done. Next up we have ENSB, which is a well enhancement company. This company right here has an earnings release on Monday. I think that this particular earnings release may just be a beat because they will be logging the sales from whenever the oil rally was occurring the first time, where prices of oil per barrel were at very astronomical highs. This company right here has a pretty low float. It is likewise very, very highly reactive to news like what we have seen over the last 24 hours. And this company, like the other ones that we have just mentioned a moment ago, is very, very integral to the onshore industry. And this is a very small and effective company, which too shows short squeeze characteristics. So next up we have USWS, and this fracturing services company right here didn't really react last time the oil rally was going on, and I'm thinking this time it probably will react a lot more because we're seeing a lot of promises from very unexpected figures like the Democrat President of the United States renewing oil leases on federal land. So last on the list for this week is SQQQ, and this is a inverse ETF fund which shorts the NASDAQ. I've been pretty bullish on this one over the last couple of weeks and announcing my price targets on Webull. I think my next price target for this one is going to be somewhere around the $43, $45 mark, possibly this week, unless something comes out to the effect that the U.S. has the situation under control, or more articles possibly intensifying the situation over there in Ukraine drop over this weekend. So anyways, I asked my friend on Webull, Light of Monway, what he thought about SPY in relation to SQQQ, and he's been pretty bearish on SPY, whereas I've been pretty bullish on SQQQ, which totally makes sense to me because I think that our market is going to most likely see more downside in the coming weeks due to what is going on top of all of the other issues we had before the start of this year. And what he noticed was a bullish engulfing sandwich pattern, which he circled in red down there for you. This would probably confirm a downward stair-stepping pattern in the short term for SPY. This is something that I probably would agree with here. And while I'm not too happy about that, those are just the facts. And at the end of the day, we are traders and we look for opportunities to trade off of. So to really highlight everything that we have just covered, I would like to use some great analysis from my friend Stockdude on Webull. I highly recommend pausing this video right now and reading everything that he has to say right here. He covers just about every detail that there is to cover in this whole situation. He weighs up the pros and the cons and gives a little incentive for his perspective as to where he thinks oil will be heading in the short term, something which I highly agree with as well. And he breaks down a bit of information covering INDO specifically right here, where he shows that there was a 0% short interest change for INDO. In this post right here, he seems to be alluding to the fact that shorts may be a little bit scared to start approaching open positions on this one, because due to the sole prospect alone of war just earlier on and the supply chain issues associated with them before Obviously, some pretty strong measures were taken to try to mitigate those. Short positions seem to be approaching this one with higher levels of caution, and I think that maybe this 0% short interest change that we had seen on Thursday could really indicate that as well. So that is all that we have for you in this video today. I hope that this summarized pretty well our perspective on what we are anticipating for the week/weeks ahead. If you follow me on Webull, you know that I do post pretty regularly, and I try to keep my followers updated on there. And if you are not following me on Webull and you just by chance stumbled across this video, I would definitely appreciate it if you went and followed me on Webull as well. And if you like this video, please do give it a thumbs up. Subscribe to our channel if you would like to see more.